Good morning and welcome to your market update for February 9, 2026. U.S. stock futures are signaling a cautious start to the week as traders brace for a busy economic calendar, including key inflation and jobs reports that could set the tone for markets this week. After a strong rally last Friday that lifted the Dow Jones Industrial Average above 50,000 for the first time, futures on the Dow, S&P 500, and Nasdaq are modestly lower this morning, highlighting some of the volatility lingering after last week's tech-led swings. Major indexes ended last week on a high note thanks to broad participation from tech and cyclical sectors, but overnight moves reflect profit-taking and a focus on upcoming data. The S&P 500 and Nasdaq both saw gains as tech stocks regained leadership. Yet some of that optimism has been tempered by concerns over rising treasury yields and capital expenditure headwinds in big tech. Across global markets, Asia equity benchmarks are also signaling strength, with Japan's Nikkei surging as political stability and anticipated fiscal stimulus lift investor sentiment. European and Asian markets continue to react to shifts in monetary policy expectations and geopolitical developments that could ripple into U.S. markets later in the week. On the individual stock front, early activity in pre-market trading shows notable moves in several tickers, with swings reflecting both earnings reactions and sector rotation. Meanwhile, gold has been climbing as the dollar weakens, a sign that some investors are seeking amid broader risk balancing. In thematic trends, AI-driven volatility remains a key market narrative. Stocks tied to artificial intelligence and hyperscaler spending are experiencing choppy flows as investors weigh massive capex commitments against profitability concerns. At the same time, analysts are watching semiconductor leaders like NVIDIA for potential catalysts this week when earnings roll in. From a sentiment perspective, investor confidence has been mixed, with some surveys showing optimism about economic growth and market prospects this year, while certain volatility measures suggest nervous positioning around downside risks. Against this backdrop, hear what investors should monitor today: upcoming U.S. economic releases, shifts in Treasury yields, and sector performance early in the session. These factors will help refine short-term market direction and support more informed investment decisions.